Bank of America. No credit score, no down payment, no PMI. Man, why do I feel like we've been here before?
Well, this is deja vu.
I mean, seriously, I'm no psychic or anything, but the number 2008 keeps coming to mind. Did Bank of America just alley-oop the next housing recession? What's up, everybody? I'm Sean McMurray, co-host of BPM REIA Online, and this is Mr. $250 million in real estate transactions, my mentor, my good friend, president and owner of BPM REIA, Anish Dave.
Hey, this is Anish Dave, CEO of BPM REIA.
It looks like Bank of America is back to the shenanigans. Or are they? Here's the scoop. Bank of America recently announced a new lending program targeting first-time homeowners in predominantly Black and Hispanic neighborhoods. The program offers loans requiring no down payment, no closing costs, or PMI insurance. In addition, this loan requires no minimum credit score, with eligibility focused instead on a borrower's solid track record of rent payments and regular monthly bills like utilities and phone. My initial knee-jerk reaction was, holy f***, this is 2008 all over again. I mean, seriously, adjustable rate mortgages made their way back, and now we're talking about no down payment, no closing costs, and there's no minimum credit score. Sure, they are considering rent payments and utilities as a barometer to measure your ability to pay the mortgage. This should have really been a thing a long time ago. Not the only determining factor, but it should certainly play into the formula. The problem is, home ownership and renting are two different scenarios. Where in renting, the landlord handles the major expenses such as broken ACs, roofs, plumbing issues, holes in the floor. If you haven't seen Money Pit, it is an extreme version of what I'm talking about, but I've lived it. We've lived in our home about 3 years now, and we love it. But we've already put maybe a little over $100,000 into hurricane windows, replacing the AC and the ductwork, plumbing issues, replacing floors, repairing damage from leaks, etc., etc. This is my first house. I didn't have to worry about these things before. Guess what? You are now the owner of the house, and you are responsible for fixing these things. Will they have enough money to pay for the routine maintenance of the home? Folks, let's think about this. Bank of America is making concessions to make home ownership more attainable for first-time homeowners in predominantly Black and Hispanic neighborhoods. Nowhere did we talk about low interest rate loans. These loans would qualify as subprime loans under ordinary lending rules. That means whatever rate someone with a good credit score is receiving, let's add a few percentage points to that. The current 30-year fixed loan mortgage rate is 6.879% for a 700 to 719 credit score. I couldn't find a way to do 30-year fixed loan, no down payment, and credit score below 640, but what I did find, we are nearly a whole percent higher at 7.41%. Bear with me, y'all. I'm working my way to the point. The average price of a home in Miami is $515,000. Let's assume the 7.41 interest rate, 30-year loan terms, property tax at $9,270 a year, which is about 1.8% property tax, and let's just assume an average home insurance of $1,000 a year. On those numbers alone, we are looking at a $4,425 monthly payment. Who can afford that payment? So that means we are looking at homes that are below average price. Are these homes going to be in the best condition and move-in ready? Chances are they're not. So that again brings me to point number 2. Will these homeowners be able to afford the mortgage and the maintenance that is involved in owning a home? Especially the maintenance involved with the home that is below average prices and probably not in the best condition. Before everybody starts jumping down my throat and accusing me of not wanting home ownership for everyone, pump your brakes. I want home ownership for everyone, but I'm not sure I agree with this direction. Anish, you've been hearing me blabber for 5 minutes now. I'm sorry. This is something that I'm passionate about. I don't want good people being taken advantage of. I don't want people being sold a dream that they aren't ready for, and they end up in a worse position than before. I do not claim to be the smartest guy in the world, so I'm pretty sure there's something I'm missing. Anish, am I missing anything? Is this a bad idea, or am I just getting a little worked up?
So Sean, you know what? It is a good idea, but there's a caveat to it, right? And you brought up some great points. Is the house going to be in great condition? Is the first question, right? Is it going to pass inspection? If they don't have any money for repairs, you're right, it's actually going to be worse for them. It is about time that these big banks actually start taking care of, African Americans and Hispanics or lower end neighborhoods and do something for them. But it is a catch-22, meaning, are they putting me in a worse spot? Not really if the people actually qualify. These are full doc loans where they're actually checking your pay stubs to see if you qualify. Are your W-2s, your tax returns? The idea is for these loans to work, they have to match the rents of what they're paying. So that could be a good thing, but if we're using your Miami averages, it may be tough to find those kind of properties.
Okay, well, that's kind of positive in that people will not be put into bad situations, essentially being put into a home that they can't afford. With that being the case, and Miami being one of the test cities for this program, as you stated, right? Will they be able to find a home that qualifies? Will the people that they're trying to help actually be able to take advantage of this program?
So, Sean, that's a tough question. And I'll tell you why, because again, they have to have that income to actually qualify. How many great properties are out there at that price level? One of the things that we do is we actually fix houses in lower end neighborhoods, make them safe for new families, looking to move in where they shouldn't have any major repairs. A lot of times we're actually updating the roof or putting a new roof or the AC, so where it's truly turnkey. But it really comes back down to affordable housing. We're just gonna have to wait and see what the market says.
So I guess it leads me to, what do you suggest for these first-time homeowners, right? So Bank of America is testing out this program, which, like you said, it's a catch-22. Do we need more programs like this, or should we really encourage education, in particular financial education, basically to try to uplift these communities that way? Or is it a combination of all?
Yeah, I really think it's both, right? You always need financial literacy. That's how we're going to start changing these neighborhoods. It's going to be very important. The second end of it is, working with investors like we have in our network, a lot of great investors that do great work. So if you really get one of these turnkey houses ready while they're fixing them up and you're pre-approved, you might be able to slip in on this new program.
Well, there you have it. The program isn't as bad as I thought. We're not talking 2008 crash scenario, right? Or putting good people in bad situations where they can't afford the mortgage. Although I question who in Miami will qualify for this and what homes are out there that meet the pricing criteria. I don't feel this is the best path forward alone. I think proper education and financial education, for that matter, are key to improving the lives of those who would qualify for these type of loans with the help of the big banks. But even with that, this is my humble opinion, and I don't claim to have all the answers. I'm just not convinced this will produce the desired results. Sound off below. Full disclosure, I own Bank of America stock. This is in no way intended to endorse or not endorse their stock. If you haven't subscribed, make sure you do so and slap the thumbs up button, for crying out loud. Anish, final words.
Yeah, I mean, the big banks, they run it, whether it's the Bank of America's out there, the Wells Fargo. First of all, it's a good, promo thing for them, meaning, hey, they're trying to help. And I agree with you, Sean. I don't know where they're going to find homes at a cheap price. And then the second end of it, if you're using your numbers, are these really low-income people, right? I mean, if you need $7,000 or $8,000 a month to qualify, that is more than the average, Miami-Dade or Broward County or South Florida family makes. Usually, the average annual income is around $60,000 to $70,000. So I'm not really sure if there's enough properties out there for them, but at least this is a start.
And we're out.